Welcome back to Atlanta and Company. I'm Christine Pilara. Hey, wouldn't it be nice to get paid to shop? Well, Uncle Sam is paying you to shop for a home. Not only are home prices and interest rates low, but with the newly extended and expanded home buyer tax credit, you can save big. So just what do you need to know about getting that tax credit? Well, the shopping queen, Fatima Medikarimi, is here to tell us all about it. Good morning.
Good morning.
This is a great subject. We know a lot of people are interested in it, but we need to break it all down. So please explain to our viewers about the first-time homebuyers tax credit and how it can be beneficial.
Well, the first-time homebuyers tax credit is literally equal to 10% of the home's value up to $8,000. And remember, a tax credit is literally a dollar-for-dollar reduction in your taxes or even money back. So it's much better than a deduction.
Right.
So that's what the tax credit is up to $8,000.
Now, under this tax credit, who is considered a first-time home buyer?
Yes, first-time home buyer doesn't necessarily mean first-time home buyer.
Okay, see, yeah, that's, I'm sure you got to read the fine print there, right?
Well, we're dealing with government,
Right.
so there's always fine print.
Yes.
In this case, it is very good fine print, actually.
Good.
Because a first-time home buyer is basically anyone who hasn't owned a home in the last 3 years. 3 years is the magic number here.
Okay.
So if you have owned a home before, but it was, longer than 3 years ago and you've sold it since then you would actually be considered a first-time home buyer under this program.
Wonderful.
But there are a few caveats to this, is that, remember, married couples get treated as a whole. So if someone else has, if one of the couple has owned property prior in the past 3 years, then they would not qualify.
Okay.
But to unmarried people, if they buy a home together, and one of them qualifies, they could actually get a partial tax credit.
Okay, well, that's something. Now, explain the repeat home buyer written into the tax credit.
Yes, that's something that Congress just passed when they expanded the original. They added this for repeat home buyers, and these are people who literally own their home right now. And the magic number for them is actually 10% of the home's value that they would be purchasing up to $6,500. So they get a little less.
Okay.
They don't get the full $8,000, but they get a little bit less. And the rules to be considered a repeat home buyer is you have to have owned and lived in your own home for the past 5 out of 8 years.
Okay.
In order to qualify, and you have to be purchasing a home that would be considered your principal residence, not a vacation home or a rental property or anything like that. It would have to be moving into another, home that would be your principal residence.
Okay, so do you have to make a certain income in order to be eligible for homeowner tax credit?
Yes, and that's another good thing. When they expanded the tax credit, is they expanded the income limits as well, because the income limits were lower before. Now, for single taxpayers, the income limits are $125,000, and for married taxpayers, it's $225,000. So
Great.
definitely more room there.
Oh, absolutely. Now, the last time folks had to rush in order to take advantage of the tax credit, is there a time limit for this extended version right now?
There is a time limit, but definitely not as TikTok as the original, which was November 30th at the end of this month. Hurry,
Right.
let's go. The date for that is April 30th. You either have to purchase your home by April 30th, or you have to have a binding contract by April 30th of 2010 and close totally by June 30th of 2010.
Okay, well, that's good.
Yes.
That gives us some room here. Now, how can you get the tax credit sooner? Did I hear that's right?
Yes, that's right.
Nice. Tell us.
Well, if you're purchasing a home in 2010 next year, for example, you would actually have to technically wait until 2011 when you filed your 2010 taxes to get the tax credit. However, the government wants to put money in your pocket sooner.
We love that when they want to do that.
Yes.
when it's rare, it's very rare, and we love it when it happens.
Yes. So you can elect to treat your 2010 purchase as a 2009 purchase and put it in your 2009 taxes. So you can get your money back faster. So even though you might purchase your home next year, you can file it in your 2009 taxes and get that money in your wallet.
That's fantastic. Now, what about this Georgia income tax credit?
Yes. In addition to the federal tax credit, we had a Georgia tax credit as well. Unfortunately, though, the state of Georgia has not extended it past November 30th. So those who have or will purchase their home by November 30th, they benefit from the $1,800 but at this time, any purchase after November 30th would not qualify.
So we still have some time, but not much.
Not much.
Okay,
Yes.
and that one is again 1,800.
1,800, yes, for your Georgia income
For
taxes.
Georgia.
Yes.
Okay, that's still something. And where can we get more information? Because I know our viewers are probably like, this is a lot of information, but we want you to take advantage of this. So where can we get this good information?
Well, first of all, for your specific situation, I do have to mention that consult your tax professional.
Yes.
Because there's lots of fine print with this, but a really good resource for just general information is federalhousingtaxcredit.com.
Okay.
Federalhousingtaxcredit.com. And that has great frequently asked questions and information for both first-time home buyers and repeat home buyers all about the tax credit.
Fatima, we love having you. You're always just such a wealth of knowledge, and we appreciate that so much. We'll see you next week.
Definitely.
And if you would like more money-saving tips, ideas, and coupons, make sure you visit the Shopping Queen's website at shoppingqueen.com. Well, we're paging Dr.